morning, traders. This is Monday, March 9th, and we're an hour and a half into trading. Not a good day for the market right now. We started off the day on a lock limit down on the S&P 500. It was down 5%. We were down at that 275 level. We spent some time there, and the market has been able to bounce off of it, but you can see my 1OP indicator has crossed here. That is bearish. I'm looking for us to continue to drift lower, although you can see right here that these bars are tiny. They're getting smaller, which is a sign of support in here. So we could see a little bit of a bounce. We'll be watching that while I go through my analysis. And I'm recording early because I know there's a lot of panic. Everybody's really nervous right now. They don't know what to expect from the coronavirus. They don't know what economic impact it's going to have. So I'm going to cover some of those topics and show you a couple of stocks that I like on the short side, a couple that might be setting up on the long side. So breathe easy. This is a day to really tread cautiously with your trades. Trade smaller size, reduce your trade count, look for those opportunities. The bid-ask spreads, even on stocks, are fairly wide. Options, you can't even trade them. It's just ridiculously wide right now. So let me go into my early morning comments, and I'm going to put those up very quickly because you can see right here, you can focus on the different circuit breakers that we have. And here's how the trading day could play out if some more of those are triggered. I'm not expecting that to happen, but you can see that the next trigger would be at a minus 7% on the futures. That puts us down to 27.64. And then there's another trigger at 13%. That would be 25.86 on the S&P 500, and then a 20% trigger at 23.78. I'm not looking for anything like that to happen, okay? That's not going to happen today as far as I'm concerned. I don't see the selling accelerating like that. I'd be pretty surprised if we even hit this 7% trigger today. So, what's driving the market? Yes, coronavirus is at the heart of all of this. As I've been saying for weeks, we don't know how consumer behavior is going to change because it's unpredictable. We don't know how to measure panic, and panic can feed on itself. To a degree, that's already starting to happen. So over the weekend, yes, we had a more widespread occurrence of the coronavirus on a global basis, and that is weighing on investors right now. Italy has restricted travel to about a quarter of their population, and here's how it starts to feed on itself, is that as travel restrictions go into effect, everybody kind of clams up, they shut down, and the economy comes to a screeching halt. Full on brakes, everything shuts down. And so we saw that in China, their exports were down 17% in February year over year. We were expecting a big hurt, and that's exactly what happened. That same fate is probably going to spread along with the virus globally. So in a country like Italy, who's had sovereign debt issues for a very long time, you're talking about tourism that accounts for 15% of its GDP growth. If tourism is impacted, Italy's credit worthiness will decline. And so we're also seeing that in the financial sector right now. I'm going to put up some financial stocks. If you watched my video last night, I had mentioned to you that one of my favorite short sectors right now are the financials. So I'm going to put up JP Morgan Chase, which I am currently short, and you can see how the stock is dropping. Now, I put this in last night's video. You just had to wait for that early bounce to get short, and you'd have been in really nice shape this morning. So I hope some of you took my advice on that one. It's one of the only trades I have on right now. I'm also short BAC, Bank of America. I think that stock is also going to be an excellent short. So I'm going to go into my chat room real quick, and I'll show you the timestamp on my JPM short so that you know that I'm short on that. And I've also been pointing out some other stocks that I think may actually get pretty attractive in here. So here's the chat room, and here you can see that I'm referencing JPM. I'm talking about how illiquid the options are. We had a March 13th 95 put, and it was $3 out of the money, and the market on that put is $3.50 by $4.90. So very, very wide. We can't trade that. We have to go in and short the stock. That's the only way we can trade right now. There you see my JPM short at $97.02. and that was posted about 55 minutes into trading. So that short is working out very, very well right now. You can see the stock is down to 94.25. Again, this is in last night's video. I think banks are going to continue to be a good short. I'm going to put up another stock that I'm short, which is BAC. I waited a little bit longer on this one. That short is also working out well. I'm short up in here around the 22.65 level, as I recall. So I plan on keeping those two core positions. I did also short PH earlier this morning, Parker Hannifin. They're very tied to the oil industry. And here's the other problem that coronavirus has created. So you have a lower demand for oil globally because of all these travel restrictions. I know in February, China's consumption for oil was down over 20%. That's put downward pressure on oil prices because there's a huge supply right now. OPEC tried to get together and they tried to agree on production cuts. Didn't happen. So instead, Saudi Arabia said, well, the heck with it. We're going to pump like mad, and we are going to put all of you high-cost producers out of business. That's our solution. So Saudi Arabia is going to pump oil. Oil dropped 30% overnight. And that also is weighing on the market because you have the energy sector in the S&P 500. So those stocks are tanking, and we'll take a look at some of them. You also have a very high wage workforce that may be unemployed very soon at those low oil prices. So that's another bad impact on the economy. Now, consumers do benefit in the form of lower pump prices, so that's actually good for consumers. And goods are also impacted positively because you won't have all the transportation costs, and a lot of products actually require oil as an input, all of your plastics, for instance. So typically, I see oil as being a zero-sum game economically, but today it's definitely having an impact, and part of that impact is, again, financial. It's credit related because you have banks that have lent money to these large oil producers, and now those loans may be in jeopardy. If you take a look at stocks in Europe like Credit Suisse, take a look at that chart. Look at that stock from $14 just a few weeks ago down to $9. Deutsche Bank, DB, lots of exposure in the Middle East. That stock has gone from $11, it's down to $6. It's almost been halved. When you start to see that kind of price action in large banks, it tells you that there are going to be some credit ramifications. We don't know the extent of it right now. Consumer credit's at all-time highs. Municipal debt is. You have corporate debt levels are also high in certain industries, even on a sovereign level from the 2008, 2009 financial crisis. A lot of that debt burden got shifted from financial institutions over to sovereigns. And the U.S. has got a very large debt load as well. So you can look at Japan, you can look at the shadow banking industry in China with a $21 trillion shadow banking industry, unregulated. Who knows what might be happening there, especially after 3 decades of hyper growth. There's a lot of inefficiency. So as the tide goes out right now, credit concerns are the biggest issue for the market. So let's take a deep breath and let's think about what might possibly happen over the course of the next few weeks. There could possibly be some silver linings, and I'm not candy coating anything here, folks. I don't know how everything's going to play out. I know that when credit concerns start to surface, they can escalate very, very quickly. But I believe that the number of corona cases is going to increase dramatically here in the United States in the course of the next 2 or 3 weeks. Why? Because we're testing for it. Yes, it's spreading, but I think it's already been around for a very long time, and that's why we're seeing it pop up in areas where there's no known source. The key factor there is that 80% of the people that have the virus, they fight it off, and there are no known symptoms to it. So there's a good chance that this virus has already been alive and well in the United States for quite a while, and it's still got a lot of spreading to do. But I think that as people get tested for it and they start to see, oh my gosh, it's everywhere, that they panic initially, but then after I think maybe 3 or 4 weeks, when they realize that, hey, it's been around and I haven't gotten sick yet, not everybody gets sick, and 3% of the population is not going to die. And that's the statistic that's frequently quoted, is that it has a 3.5% mortality rate. Well, people are automatically assuming that everybody who gets it is going to have a 3.5% mortality rate. The fact of the matter is that not everybody gets it, and it does not transmit as efficiently as the flu. So not everybody gets the flu either. So I think once all of this is out in the open and we know exactly the extent of the coronavirus and people start to take a deep breath and realize really what it is, I think calmer minds prevail, but that may take 3 or 4 weeks, and I don't know the extent of the hardship that's coming up between now and then. I don't know how much the economy is going to shut down. We don't know how corporations are going to react. We don't know how the government's going to react. All I can tell you is that you're probably going to see some government bailouts for industries that are really hurting, like the cruise industry, for instance, and the airline industry, where they've basically shut down and people are not traveling. So there's some hurt ahead. There is no question about it. Let's keep that S&P market up in the background so that we can keep track of what it's doing. And you can see that, yes, as those candles were compressing in here, I told you there's a likely bounce probably coming in here. So we'll see what happens to the market overall. But on a longer term basis, if you look at that daily chart, this bounce that took place last week, I expected it to take a lot longer to unfold. I thought we'd float up to that 200-day moving average. I thought we would sit there for a little bit. Let's put that average up. We'll put up the 100-day moving average. And so my expectations last week were we're going to get this big sell-off. We sold some out of the money bullish put spreads on that sell-off, and they were way out of the money. We got in at very, very good prices. So I expected that bounce, and we got it. And I expected us to kind of float around that 200-day moving average. This was way overextended. Well, Thursday and Friday, we started to see some big cracks in the dam. I was very happy that we had bullish put spreads expiring on March 6th because I was starting to get pretty nervous. And I noticed that even though those put spreads, Amazon was a classic example. I was 70, 75 points out of the money on Friday with only hours left to go until expiration. I could not buy back those $1,800 puts that were $75 out of the money. I was short the 1,800 puts, long the 1795s. That's a $5 put spread. That thing was trading for 30 cents, even with an hour left until trading. They were not going to let me out of that trade. And so you might think, well, this is a good environment to sell some bullish put spreads or to sell some bearish call spreads. I got to tell you, plan on being in that trade until the final minute of expiration Friday, because those premiums are not going to contract, and they'll keep them a mile wide so that you can't even exit that trade. It's pretty crazy right now. That environment is telling us to keep our trading to a minimum, especially when it comes to option trading. You cannot be a buyer of options with option implied volatilities being sky high. Look at the VXX explode. Look at that. It was up to 41 on the open this morning. This is historic lows on option implied volatilities, and look at us go right now. So if you're an option buyer, your chances of making money are very, very slim. If you're an option seller, you better be right, because you're going to be in that spread until the very, very end. So we need to let things settle down a little bit. We need to find market support. We need to see that on a technical basis. That means with option bid-ask spreads being a mile wide, you cannot navigate that. The slippage is too great. Even on the most liquid stocks, I just showed you JPM. That's usually got a nickel wide market. We're talking about $1.50 bid-ask spread. So stock trading, yes, that's the way to go. Option trading, forget about it. And you can't get anything done between the bid-ask either, because the market makers are all on auto quote right now. They're not going to budge. So your best bet is to try and pick some points, try and find some stocks, day trade in and out of those stocks intraday, and try and find your opportunities that way. So let's take a look at a few stocks. I've got a few interesting ones. We're getting a little bit of a market bounce here, which is good. And some stocks that I think are actually holding up pretty well and I think should perform well. Google would be one of them. I don't know that Google is going to have a big hit because of the coronavirus. And if I think about their business model, a lot of employees can work out of their home. And that's probably what they'll end up doing. Are people going to surf the internet less when they're at home and the economy is shut down? No, probably not. They'll probably end up surfing more while they're at home, whether they're trying to get updated on the coronavirus or keep in touch with news, whatever's going on. Plus, they'll watch more YouTube videos. So I think Google is the kind of stock that you want to own even in this type of a crisis. And there I would be looking to sell out of the money bullish put spreads when the dust settles. Not now, not today. Can't say this strongly enough. We got to wait for market support. But then, yes, definitely below these major moving averages, below this technical support level right here, absolutely. If you can get some bullish put spreads off, I think those are going to be in nice shape. Again, very little exposure to coronavirus. I think Facebook, you could probably make the same argument, is that people will spend more time surfing on the internet, keeping in touch with their friends. I think Facebook is probably the type of stock that does well. So we need to go in and we need to take a look for relative strength. So we have the market bouncing right here. We've got Facebook starting to bounce, and it looks like it's going to take out the high of the day. And look at here, the market's not even close to the high of the day, but Facebook is. So that's the kind of stock that we would want to be day trading from the long side today. If we're early and the market falls out of bed and it continues to go down, Facebook is going to tread water. And look at it right here. You can see how it's grinding higher. Well, how do I know that this is going to be such a good trade? Let's put up that relative strength indicator. 1 OSI in option stalker. Look at that relative strength. Okay, well, I can see it on a chart. This is nice. So what does that do for me? Well, we can search for it. We use our custom search engine and we search for relative strength. That's one of the inputs that we have, strength versus SPY. I can do it on a 5-minute basis. I can do it on a 15-minute basis. I could go all the way to a daily basis. I could do it all. And the stocks that come up on this search are going to show me exactly where the strength is. So if I run this query, these are the stocks I want to focus on. It doesn't get any easier than that, folks. I really hope you come in and try Option Stalker. Look at this. You've got Amazon, eBay, Google, Facebook. Okay, I know where to look. If I think the market's going to rally, I think I'll go in and buy some stock. Boom. That's right where you go. When you see me post these trades day in and day out, this is not a mystery. This is not magic. That's how we do it. And that's the edge that we have, is that if we're in the right stock, there will be moments, not often because I keep my finger on the market pulse, but there will be moments when maybe we're wrong on the market, but because we're right on the stock, we can get out of it. We have plenty of cushion, time to evaluate. We can maybe take a small loss. Oftentimes we take a gain on the trade, even though we're wrong on the market or we're early on it. That's the edge that we work in. If I buy the S&P 500 futures and my timing is a little bit off and the market drops, I am going to lose money on that trade. No two ways about it. But if I were buying Facebook right now and I were a little bit early on my entry and the market pulled back, I'll probably be able to get out of this trade for little, if any, loss. That's how we trade these reversals in the market, and that's how we're day trading right now. So I do like Google. I do like Facebook. I think that Microsoft has been pretty good today. Apple could have supply issues, so I'm not as big on Apple. But those are some of the bigger names out there. Amazon, I think, could also be an issue because you have possible supply issues. A lot of goods are produced in China. I think as far as the distribution model and people being home and wanting to have things delivered to them, I think that works fine in Amazon's favor. I think that part works really well. I just don't know about that supply component. Plus, it's a very people intensive business and they have to be in the distribution centers to get the product out. So if they start having some type of coronavirus contagion where they have to shut down, it could impact Amazon. So look for those companies where there's not a lot of exposure to coronavirus, and then you'll be able to focus on the types of stocks that you want to buy during this dip. Now, I've got a couple of other stocks that may end up being very good plays. I think eventually refiners are going to be a really good play. Haven't been a lot of refineries built domestically. In fact, I don't think there have been any new ones built for decades. So they are a printing press. They do have a lot of maintenance costs. They're also vulnerable to changes in oil prices, but low oil prices are actually good for refiners. Are people going to travel less this summer in their cars? I don't know. In fact, I think they may end up doing more of that domestically if they're not traveling abroad. So I just think that refiners long term will be just fine in the energy sector. And I think that the baby is getting thrown out with the bathwater here. So not today, but yes, I will be looking at refiners like Valero as a possibly good longer term investment, maybe a bullish put spread once they find support. PXD, Pioneer Resources, they have huge assets in the Permian Basin, should be a very low cost producer. They've got a pipeline that runs from there into Houston. They were waiting on that. They had a huge oversupply for about the last year and a half. So I think they'll be a low cost producer, and I'd have to take a look at the fundamentals here, see what the debt load is. This is a time when you have to lift up the hood and you have to do fundamental analysis. That's not something I do a lot of because I'm a very short-term trader. But if I'm looking at some longer-term opportunities, you bet. Then I had to roll up my sleeves and I got to start taking a look at the cash flow, the debt burden, all sorts of things like that, and see if the company can just sit on their assets and be okay for a while. So that's the type of analysis that you need to do. And to recap, I would say you want to be short financials, and I think that they could have some real issues, some credit issues, and they are also weak relative to the market. And I think on the long side, I'd like to leave you with the possibility of a Google and a Facebook. I think those probably do well. I'd be a little bit careful of Netflix only because it has not seen a lot of profit taking. And eventually, when the market starts to fall, it's below that horizontal support level that I referenced in last night's video. So it has breached that. If you start seeing relative weakness in it, it'll come down to those major moving averages. And again, this is simply on the fact that people start looking at their portfolios for the stocks that have not been beaten down, and they start liquidating those because they don't want to sell their big losers. And so Netflix could see some selling just because of that. Take a deep breath. Let's see how the day plays out. I don't think we're going to hit that 7% limit today. So I don't think that we're going to have any more triggers hitting the market, but this is a big move down. I'm looking for things to get worse, not better, over the course of the next 2 or 3 weeks. I think there's going to be a huge scare when people realize that the coronavirus is here and well in the US, and it's much more widespread than anybody could have imagined. But I think once that fear runs its course in a month or so, they'll go, I've probably been exposed to it. I didn't get sick. Everything's okay, and things will gradually start to get back to normal. So I hope this video helps you. If you like the content, please give it a thumbs up. Please subscribe to this YouTube channel and turn on your notifications. You never know when I'm going to be posting them, but they'll always have trade ideas in them and lots of education. Thank you. Good luck. Hang in there. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.